All right, I'm going to go ahead and start. But with that said, I'm going to go ahead and just leave the question box open instead of just enabling it at the end. That way, whoever can ask questions just when they feel. And if that ever becomes, yeah, and if that needs to change, then I'll just change it as that time arrives. All right, so again, the question box is open. So move some things around real quick. All right, so coming into today, really sort of a breakout of a new all-time high, breakout of a few days trading range. But the biggest issue, if you've been paying attention to what Al's been saying, is the risk for the bulls is still down here. This is not enough of a pullback for the bulls to move the risk up to here. They need either a deeper pullback lasting more bars or a strong breakout. And this is not a strong breakout. They want to see something like this, one of these bars. So risk is big, probably limits it upside. 60-minute chart. Sorry, 1 second. It's easy to press too many buttons on TradeStation. So 60-minute chart. We've been channeling up. We're starting to go sideways. You can make the argument that this is kind of subtle. So we have a gap right now above this high, one of these highs. So kind of like a trading range day. So trading range, bull breakout, sideways, forming an upper range, and then test back down. Really, it's a trading range. Think about it this way. Here's the breakout. This is the breakout bar, and we've pulled back for like 5 hours after one breakout bar. That's not a breakout. This is a breakout. That's a breakout. This is a breakout. Weekly chart, we have to give bulls credit. They are getting follow through as of right now. They're getting more follow through. However, it'll be interesting to see, can we get a close above this high? Will we even have a bull bar? There's still 2 days left in the week. So 5-minute chart, and again, every new high we've sold off, so we're probably going to sell off at least a little bit again. Probably get back into this range. All right, so this high, this blue line, this high from a few days ago, the prior all-time high from a few days ago. So anyways, bar one, this is a very interesting bar, and it happens every once in a while. Let's see if I can, the risk is so big, kind of like that, very similar, but I want to see if I can find one real quick. It might happen here and there, frequent enough. I don't want to spend too much time looking for it, but so yeah, bar one. The biggest problem with bar one is just the size. These bars are always interesting because you see it forming and you're thinking, failed breakout of yesterday's high. It's going to set up a decent short. Possibly stop interest short because on its low. But the problem is it keeps going down and down, and by the time 2 minutes into the bar, it's already this big. And you're already thinking to yourself, wait a minute, do I really want to risk over 4 points on the first trade on a huge bar? Well, as good as this bar looks, there's probably buyers below, simply because you have a low probability trade, shorting below the first bar of the day, shorting below a bear bar on the first bar of the day, buying above a bull bar on the first bar of the day. Those are low probability trades. And the issue with low probability trades is you need, ideally you want lower risk. So in this situation, you have high risk and low probability. So that means a bear short who's shorting below has high risk and low probability, while a bull who buys low has a lower risk compared to what they normally would have, and a higher reward because they're fading a breakout, and most breakouts fail. So the bulls will probably win. But again, it's still an okay short. Always in short on bar one, so you sell the close, short, sell and stop below. But you have to be prepared to get out. You're really, I can tell you from experience, you're much better off if you can get good at being able to get out. What I mean by that is when you sell this close or sell below here, don't wait until getting out all the way up here. Get out early, especially on the open, because of how common opening reversals are. So you can see bar 2 and bar 3, not great bars. They're follow through, but bar 2, like a 2-tick bear, 2-tick body, 3-tick body, but big tail on bottom. Then the next bar, you can see so many sellers above the high of bar 2. This bar couldn't get above it, and we turned down. But again, it just doesn't. It just seems like there's probably going to be buyers below. They bought this close, they bought this low. So look right here, 60.50 is this low, and price went to 60. I read that wrong. Okay, so this low is 2160.5, and this low is, okay, so 58.5. So price went exactly 8.86 lower, meaning there were so many bulls trying to buy this low and 2 points lower that they could not even get filled. Here, however, and right here, same problem. So many bulls tried to buy 1 point lower, they couldn't get filled. So with that said, I would get out above. If I was short, I'd get out above the first bull bar at 850. There's pretty high risk that we can easily get above high bar 1, and it's not a great signal bar to begin with. If you don't get out there, definitely get out below this low or on this close. Probably always in long. Bulls will buy up here, they'll buy this low, they'll buy this close. Really, they'll buy any close. Tight channel. Here they're always in long, probably going to a new high of the day. But again, these tails are a warning. Not big bodies. And this is another example of a breakout. You've probably heard Al mention before. You can get a breakout in one of two ways. You can get a breakout in just an actual breakout bar, such as just simple bars like this. 1 bar breakout, 2 bar breakout, or you can get it in a series of bars where you just keep getting bull closes, and they don't look. If you just take the bars for what they are, they don't look very strong. You get a couple tick close, a couple tick body on this close, 1 tick body, but there's tails all over the place. It doesn't look strong. But you look at a 15-minute chart, it looks like this. It's a fairly strong breakout. And that's another thing. It's very similar to, maybe it was this day. Yeah, over here. Had a sell-off, and then once you get enough bull bars up, especially, for instance, this bull close right here, the bears, they're probably going to lose, and I would definitely get out of a short here. So, I would not wait for price to get all the way up to here. Again, I would get out somewhere in here and go long. So always in long, probably more up, probably more left, probably more up. very tight channel, but you need a wide stop. If you're long, again, probably have, more up. I wouldn't get out here too tight of a channel. Here, however, at this point, 3 clear pushes up, 1, 2, 3, 1, 2, 3. You can argue, the second entry. Also, you have the best looking boulevard with the move, so probably okay to get out here. Again, you don't have to. You can hold, stop down here, betting that the first test of the moving average will fail or the first reversal down will fail, and we'll test back up, which we did. But probably best to get out here. But if you get out, got to get long again above here, or possibly here. But I think the bull, if he got long here, would probably just stay long. However, you have to be aware of how long we're pulling back. We're pulling back for quite a few bars, and at some point, bears and bulls both begin to see this as a trading range. And if that's the case, there's always the risk of some sort of double top and test down. And again, here, we tested the high close of the day, but again, tight micro channel up, first reversal down will probably fail. And again, second entry short, top of the trading range, but right above the moving average, bad signal bar, probably okay to wait, I'm not short. And then here we have you can call it a wedge, 1, 2, 3. It's just 3 attempts to test up, but the context is very different here. It's a major trend reversal. It's kind of one of those subtle major trend reversals. We'll get them every so often. It's kind of like, this isn't really a great one, but you get a spike up and then a pullback and a small double top and a test down. Or a spike up, deep pullback, and then a double top. We had one the other day. Try and find it. Yeah, this is very similar to today, except we didn't get a gap up. Just a very relentless move up, but it was very climactic, and then really we just had to go sideways until the end of the day. But you can see here, spike up, pull back, test down, probably in a trading range at this point, and a test up to form a double top, and then we tested down. But anyways, the whole point. Here we have a double top. It's a nested, so you have a double top. As Al put it in the trading range, it sounds really weird. I hope he kind of thinks of a better name for it, but normally you get a double top lower high major trend reversal or a double top higher high major trend reversal. But the problem with naming that is here, it's exactly a double top major trend reversal. So what does that mean? That means you have a spike up, pull back to a double top, so you have 1 push up, 2 pushes up, so 1, 2. Sorry about that. Trade station again. So it's a nested pattern of a double top. You have 1 push up, 2 pushes up, and then you have, the second push is made up of a smaller double top. So I would definitely get out of the long here. Hard to go short, very aggressive, but if you do, you're betting on 2 legs down. I would not get out of up here. And we tested down to the bottom, but again, weak tail is not very strong. Definitely, still always in the long, so if you're very short, you definitely get out of up here. Probably go long. And in terms of swings, you go short below, you get out below here. I wouldn't go short, it's too late. Not an easy day. Really, price became fairly difficult once you got to here, because the odds are it's going to pull back and then it's just going to go sideways, test the high, and you have the day. So again, it's a very, very difficult day. There's only so many opportunities for swings to make money, and it's easy to lose a lot of money here. It's easy to lose a lot of money in here. And the best advice is just don't be hopeful on a day like today. Don't, when you see it do this, and then you see it testing down, don't expect fair breakout test the open of the day. Expect it's probably going to fail, and we're just going to test up. So hope this helps. I'm going to wait for a few minutes and wait to see if there's any questions. And if there's not, I'm going to go ahead and end the webinar, but I'll wait a few seconds. All right, so no questions today. So I hope everyone has a great evening and a great day tomorrow. Thanks.